Good morning, guys. Happy Tuesday. Amanda Kendall here, coming to you from True Resolve Tax Professionals for our Tax Tip Tuesday today. So wanting to talk today on IRS debt and when it expires. This is a pretty common question that I get in the day-to-day practice of my business when I'm talking to taxpayers who owe back taxes and maybe they owe for several years, and one of the common questions I get is, well, when does this go away? At what point does the IRS stop actually collecting on this? And so the IRS has what we call collection statute expiration dates. Tax professional lingo is going to be a CSED. So if somebody's talking to you about a CSED, or if the IRS is talking to you about a CSED or a statute expiration date, this is what they're talking about. So there are several statutes that the IRS has. We have CSEDs, which are our collection statute expiration dates. Say that 3 times fast. We have our RSEDs with our ASEDs, which are assessment statute expiration dates. So we have all these different statute expiration dates, and they all come into play in different things. But what I really want to take a look at today is 2 in particular. I want to talk about the refund statute expiration date quickly, just because this is a common question. So the IRS only has to issue refunds and only will issue refunds for the prior 3 years. So we are in 2018 filing 2018 taxes. So 2018, 2017, and 2016 at this point, you can get refunds for those 3 years. If you were to file all of those tax returns now, getting refunds. If you were to file a 2015 return today showing you had a refund, you would actually not get your refund because you are outside of the RSED or the refund statute expiration date. So the second one that I want to spend a little more time on today is what we call our collection statute expiration date. So this is the one when you owe the IRS, how long they can actually collect on the amount you owe them. And this is a 10-year window, but this one can get a little confusing because it is a 10-year window based on when the tax becomes collectible. So let's say we're in 2019. Let's say that you filed a 2009 tax return, and most people are like, well, it's 2019, my 10 years is up. But if we take a moment and we think about it, you didn't file your 2009 return until at the earliest sometime in 2010. And so automatically, based on when you filed, you're looking at a 2020 collection statute date. Then if you filed an extension or you filed late or something happened there where it wasn't filed until later in 2000 expiration date on that. And so it's just really important to know these things. And then I also want to talk about what we call tolling situations. So you have this 10-year window, but you have certain things that can occur on your tax account that can actually do what we call toll this, which is basically it suspends the clock ticking and then adds it to the back end. And sometimes these tolling situations can even add extra time on. So a couple that we're going to talk about today is bankruptcy. So if you file bankruptcy and your taxes are not discharged through the bankruptcy, which they can be, but that's another video for another day. But if you file bankruptcy, it stops the clock. It tolls the clock on your collection statutes. And so the clock is not running while you are in bankruptcy because the IRS can't legally collect on you during that time. So it's only fair for them to stop that collection window. Is going to add that time that you're in the bankruptcy. So let's say you're doing a Chapter 7 and you're in bankruptcy for 7 months. So the IRS is going to actually take that 7 months and add it to the back end of the taxes for you. And then, sorry, I've got some interruptions going on here. They're also going to add another 6 months to the back end of the statute. So a 7-month bankruptcy is going to add 13 months to the back end of that statute. Same thing with an offer in compromise. So an offer in compromise, very similar. It tolls it while it's in review. If your offer is rejected, then it's going to add 6 months to the back end. To the back end, but you just need to know that that's why it's really important to make sure when you're submitting an offer that you're submitting a solid offer that's going to be accepted, because you don't want to toll those statutes unnecessarily. New assessments can also change your collection statute date. So let's say that you file a tax return and the IRS audits you, and through the audit you end up owing more tax for whatever reason. So that new tax amount can have a new collection statute on it. So it's really important when you're dealing with tax resolution and you're looking at a payment option, you're looking at an offer, you're looking at any of these resolution options that are out there for taxpayers, that you know what these collection statutes statute dates are, that you understand what that can mean to you, and that you're looking at all options based on they're coming up for expiration soon and you're unable to pay the tax bill. So I hope that answered some questions around the statutes for you guys. If you do have any questions, please don't hesitate to reach out to us. You can connect with us on Facebook at True Resolve Tax Professionals. You can also reach out to us through email at taxpros@trueresolvetax.com, or you can give the office a call at 720-319-8954. Hope everybody has a fabulous rest of your week, and I will see you guys on here next week for Tax Tip Tuesday.